Inflation in Canada is coming down, and we saw the latest CPI print for the month of January came out less than market expectation. Good news in the end that Canadians are seeing the inflation is kind of cooling off, but does it mean Bank of Canada is going to reduce the rates or keep the rates at this level? We have to find out. Plus, we will see what's happening in the Canadian housing market from the ground reality perspective, and how this is going to shape up in the coming months. So a lot to talk about. Stay tuned till the end. Let's go. Alright, welcome back. My name is Yasin Nizami, and I make these videos to educate my audience about the real estate market in Canada, particularly in the GTA market, plus some macroeconomic factors, some investment strategies, as well as some financial education that I try to share on this channel. So if you are interested in any of these topics, consider subscribe, and let's get back to our topic of the day. So the topic of the day is what's happening in Canada. We saw inflation coming down, right? So 5.9% compared to what market was expecting, and high level trend is going downwards. As I spoke about the inflation in the last month, that the inflation is kind of looking downwards, but looking at from year-over-year perspective is kind of misleading, because when you narrow it down to month-over-month data and you average it out for the last 7 months, you can see the inflation is kind of coming up between 2 to 3%. And the reason is in 2022, the first half of it, we saw higher monthly readings. And when you average this out for year over year, the number looks pretty skewed. Okay, that's how the Stats Canada is comparing inflation year over year, same as BLS in the US. But when we go past that period and we see the inflation year over year from June 2022 to June 2023, you will see the inflation coming right back down between 2 and 3% target range. Now, this is provided assuming there is no black swan type of event, right? There is no oil spike in the international market, because oil prices coming down, that's the main factor. The inflation is coming down. But if the oil prices goes up again and there's a black swan event, like something happened in Ukraine-Russia situation, things can get worse. Okay, assuming everything is normal, the inflation continues like this, we will see it is coming back down to 2 to 3%. Now, does it mean Bank of Canada will reduce the rates? That's the big question that we have to answer. I think that, and this is just my opinion, not an expert, but I'm just doing my research and sharing my opinion with you. What I see, that there is only one reason why Bank of Canada will reduce the rate. And what is that? If the economic situation becomes really, really worse, like a recessionary time when we see job losses across the board happening, the GDP is kind of, going negative quarter over quarter, and we see the consumer spending kind of contracting in the economy. When these kind of things happen and this economy is stagnant, then Bank of Canada has to think about it to stimulate the economy. This is exactly what happened in March 2020. If you remember, everything basically come to standstill. Nothing was moving. Economy was shut down. People were locked in their cages. So Bank of Canada has to stimulate the economy. So if the situation happens like this, then the central bank will be forced to stimulate the economy. And how do we do that? We decrease the rates and lose the monetary and financial conditions so that people can take debt and spend money in the economy. Remember, one person's spending is other person's earning. So until such time, there is no compelling reason for Bank of Canada to reduce the rates. Okay, we're seeing the economy is kind of resilient. Yes, job losses are happening in the tech sector, but across the board, the unemployment has been very, very low, right? You're seeing record amounts of jobs are being added into the economy, and we're seeing people are still kind of keeping their houses. We're not seeing mass foreclosures yet. So the situation right now is not that worst in the eyes of Bank of Canada. So there is no compelling reason for them to reduce the rates. Plus, because the rates are so high, we're seeing the affordability has gone worst. This is the irony that we are dealing with. Last year, when the house prices were record high, but the financial conditions were so low, we saw the affordability was very good compared to what we have right now. So we have seen the house prices come down 20%, but the rates are so high, the affordability is even worse compared to last year, right? That's because the qualification criteria is very tough. You have to qualify for 7+% interest rate because of stress test in order to qualify for the mortgage. So when we see these headlines, you imagine that the affordability is actually going worst. Plus, when you combine this with the housing starts data, which is going down 13% month over month, which is a leading indicator that what's going to happen in the next 3 to 4 years down the road, that when the housing starts are kind of decreasing, that's adding fuel to the fire from inventory perspective. So the supply is not increasing. At the same time, the federal government is increasing their immigration targets. So amount of people that are coming into this country, that's going to create a perfect storm from housing perspective, okay? Which is why we will see the rents will continue to skyrocket. Literally, there's no inventory available from rental or even from selling perspective. I am looking at houses pretty much every day and I'm not seeing new inventory coming into the market. So that's the situation, guys. So the inventory is so tight, even though we don't have demand, the market is so competitive that the buyer has to compete with each other to get their hands on whatever is available. If the house is good, nicely renovated, good price, it's still being sold in multiple offers. Now, so when we see that the rents are skyrocketing because of poor economic and immigration policies, plus not enough housings being added, this is creating a massive perfect storm for Canadians, right? And if you want to understand, what is the impact of higher rates in terms of people's monthly payment, take a look at this tweet. Someone has calculated the amount of interest that is going to go in out of your monthly payment if you buy today a $1 million property with $200,000 down payment, and if you take on $800,000 mortgage with 5.5% interest rate. That's how it will play out over the next 30 or 25 years. So you can see a huge amount of payments are going into interest compared to principal. That's how difficult it is going to be, guys, for you if you are going to buy a house with this interest rate in this market. Now when we see the inflation is coming down, but the jobs market is too strong, we're seeing the Canadian 5-year bonds yield are kind of spiking up again. Now this is important because the fixed mortgage rates are tied with the Canadian 5-year bonds yield. If the bond yields goes up, this will also push the fixed mortgage rate upwards direction as well, right? And why the bond yields are spiking? Well, the bond yields spike when there is uncertainty in the economy. So the market is kind of expecting Bank of Canada to continue rates in the coming months, even though they announced a pause. But when this economic situation changes, the data changes, the Bank of Canada also has to make some changes on their plan. So when the market is kind of expecting rate hikes, which is why we are seeing the bond yields are spiking, which will potentially push Bank of Canada to make further rate hikes. So that's the situation, right? So again, this is just my analysis. I am not the expert here, just sharing my knowledge and research. Take it what it's worth for you, and let me know what you think. Put your comments down below and see how you are seeing the market from this whole mainstream media perspective, as well as people like myself who are sharing just our own research without any influence. So let me know what you think. If you like it, give me a thumbs up, subscribe, share, because that's the motivation I have from you guys to continue pushing content on this channel. I'll see you next time.